What's going on, everybody? Aaron Trevino here, back with another episode, and we have two wonderful guests. We have Terry and Tony from New Braunfels, Texas, and San Jose, California. How are y'all doing today?
Doing awesome. Thank you.
Great, Aaron. Glad to be here, man.
Yeah, absolutely. No, it's great to connect. I know we connected a while back, so it's great to see y'all here, and I'm excited for today's show.
Awesome, man. Yeah, hopefully we can drop some great value for your listeners.
Sure thing. So Terry, I know we had connected a bit. I know you have a lot of different hats in the ring. You do a lot of different things. If you wouldn't mind, could you tell us, a bit about you, where you're from and what you do?
Yeah, sure. Well, I'm born and raised in Texas. I've never lived anywhere else, and I don't think that that's ever going to happen either. But I started investing in real estate myself back in 2003. Single family fix and flips, just the grind, trying to make something happen. Had to go through the recession as well, so I've seen upsides and downsides. Currently where I'm at right now with real estate is I work for an education company. So we actually teach people how to do multifamily investing remotely so that they can invest in the best places all across the country from wherever they are in the world. So we've got students from California, Florida, Israel. So they're all over the place and they're just out there killing it. But what we're here to kind of talk about today is that infinite banking concept. So Tony here's my partner. What we do is set those plans up and design them to help be a core component of a financial plan. And it really pairs well with real estate investing because of the way you can leverage that tool.
Sure thing. Sure thing. And what about you, Tony? Could you talk a bit about, who you are and your background and what got you interested in the business?
Yeah. So my name is Tony. I'm originally from Kenya. I came to this country, from East Africa about 25 years ago. So we landed in California, and I stayed here in California. My parents moved to Texas, so they're near Terry over there. They're in Dallas, Texas. I decided to stay here because I love California. So same thing with me. Just the recession and different events in the world that happened, it just gained my curiosity to learn about money. So I learned about retirement investing through a colleague of mine 10 years ago. So when I came in, I started seeing the concepts and learning about retirement insurance. I was hooked, and I've been doing that ever since. And so now the reason why I linked up with Terry is because I've been going after the real estate niche, just because I could see the power in leveraging the vehicle to help with real estate and investing and growth.
Yeah, absolutely. And you guys brought up two interesting terms. You mentioned syndications, right? So kind of working on multifamily, but yet you guys also mentioned infinite banking. Are those kind of working together, or are they two separate concepts?
Terry, you can take this one.
Yeah, no, I mean it's actually the way we invest is without syndication. Syndication has its place, and it can be a powerful tool for taking down very large properties and getting into them. But it's also complex and can be expensive to start. So we avoid it. But the infinite banking concept itself boils down to a great heart of a sound financial plan. So the idea is that you want to fund your infinite banking plan with as much capital as you can, because it's a safeguarded way to grow it with uninterrupted compounding interest, which is that curve that Albert Einstein called the eighth wonder of the world. Either you're making it or you're paying it, one of the two. So you might as well be making it. But that also grows over time, connected to the way we work. It is connected to a market, an index, and it is also protected. So it's not like, say, a 401k, which I think right now most people's 401ks are more like 201ks, but it has a floor, so you don't lose in a down market like now. So you only participate basically in good times, and it helps protect that seed capital. So it's a safe investment, but you can access those funds, and that's where the real power comes in. We'll play those funds and take advantage of real estate investments or any cash flowing type investment and use your money basically in two places at once. So you'll still get those uninterrupted compounding gains in your infinite banking plan while you borrow against it and put them to work for you in, say, a great real estate deal that comes across. If you found a subject to deal and needed a little bit of capital or something to get it under contract, or whatever the case is, maybe some repairs or whatever however your investing style works, it plays a key part, because then you can use that investment to pay back your loan. And instead of paying a bank back, you're paying yourself back. So it's also known as family banking and things of that nature. But that's where the power really comes in, because then you have acquired a cash flowing asset that pays that back, and you can continue to add to your premiums and build that up. And ideally, step out into other ways of using it in the future. We've talked a little bit and have teased a bit on how you can actually parlay this into, say, a hard money lending or being a private lender for people, things of that nature, so that you can actually step out of the workload, or so to, and be the money guy.
Right, exactly. And it's funny, there's I don't want to call it a buzzword, right? But there's certain terms out there where, it sounds pretty, it sounds nice. And in a way, to some people, they could think, hey, this sounds too good to be true. Infinite banking, right? People see money as something that's, supposed to be finite. Could you define what infinite banking is, and how an investor can use it?
Yeah, I can take over this one, Terry. So
Great.
the one of the reason why it's an infinite banking is because it would get to a point where your money is actually making you money. You're leveraging the power of compound interest to be able to leverage an account. So, for example, if you were to put money in any vehicle, right, the bank, put it in the stock market, um, those other vehicles, that money at some point as an investment, there's no infinite growth, meaning there's certain vehicles that are heavily taxed and really high fees. And then every time you take out money, you gotta pay dividends, right? You taxes on the dividend, the growth. So you want to get to a point where you have an account that's constantly compounding, interest, instead of having something in an account that is one day, the market is up and then all of a sudden it's down in the dumps, right? You want to make sure it has that constant growth. And for me, how I normally explain it to my clients is this. I kind of use the old story, the rabbit versus the turtle race. So rabbit is this new investment vehicles, right? Like cryptocurrency, up and down, like a roller coaster. And the turtle is slow and steady, right? And guess who gets to win the race at the end? It's the turtle, right? Slow and steady, compounding interest. And so the turtle knows that, keep the pace, is gonna get to the finish line. While the rabbit, super excited, it would have this spurts of burst of speed and slow down, but the turtle ends up winning the race. So I think that's the concept. And I like to use analogies and stories to kind of share financial knowledge, just because it's recognizable, right? People can relate to those kinds of stories. And I feel like that's the main reason why it's infinite, because once you have a set amount that you want to grow, you there's not that many things that would interrupt it. Taxes, volatility in the market. It's nice and steady. You have a good rate of return, and you're just using the power of compound interest.
Yeah, absolutely. And that's an excellent metaphor to use, right? The tortoise and the hare, right? And
Mhm.
especially because, especially dealing with money or finances, there can be a lot of areas that are, a bit scary or daunting for people because, of that maybe lack of education. People just don't know. So it's great to be around people who can fill that gap.
Exactly, exactly. It's just going back to the old school of being able to save money. But nowadays, we don't have a vehicle where you can put money aside and you can go to sleep and have a good night's sleep, right? You always have to wonder, whether it's COVID or monkeypox or whatever is happening in the world that would, disrupt the growth on our money. We want to make sure we have money set aside and we're not really stressing out whether or not it's going to be there tomorrow, just because we're utilizing the laws and the vehicles that in the power of it being protected. You know what I mean? So yeah, it's really powerful when you have something where you can save money into, and you don't have to worry about losing in the next, next few days or whatever world event is going on.
Right, absolutely. And you guys did a great job explaining, conceptually what infinite banking is. Could you maybe give an example of someone who, maybe they're up to speed now, maybe they understand, okay, now I know what infinite banking is. Where do I go from here? Right. I normally, maybe I normally do deals. Do I incorporate infinite banking into my deals, or how do those two things fit together?
Oh, okay. I think Terry can take this one.
Sure, yeah. If we can, I have a little bit of weather moving in. I'm wondering if my internet is going to be stable enough. But yeah, sure. Let's say in the multifamily space, because that's kind of where I sit now. It takes a little bit more money than you say your single family to take down these deals. So a lot of that's based on needing financing, and that generally comes in the form of, say, 80% being paid by a bank. Then it's on the investor to pull together the other 20%. You kind of maybe check in if the seller's willing to finance anything, but if that doesn't happen, what you to your infinite banking policy and borrow that amount of money that you need to complete that deal, so that you're bringing the cash to the table that needs to get that deal across the finish line, and then use the proceeds from that deal, which I would kind of make that metaphor of saying, let's take your turtle and give you a little bit of rabbit on there too, right? Because investing properly, it's going to make you more money, and then use it to pay back your loan, and it continues to go in there to your policy and build with that compounding interest, so that eventually you get a lot more funds in there, and you could actually pull out monthly against that too, to also have a tax-free retirement. And you could use this with hard money too, because a lot of hard money lenders these days are only doing 80-90% of the cash of the deals. Back before the recession, it wasn't unheard of to find the hard money lenders that would do 100%. And if you had 30% equity, you could borrow the purchase price and the escrow all the rehab money. Not so much anymore, but if you needed to go and take 10 to 15% or whatever the case is to have that down payment, where are you going to pull it from? Are you going to pull it from your savings account where your money's only making you like 0.25%? I mean, if you want to, a lot of people do that, but it's just not going to sit there and earn you money while it's waiting to be deployed. Whereas this does exactly that for you, and still provides you that liquidity that investors want to move quickly on deals.
Sure. No, and that's a great explanation there. And, I know that you'd mentioned how you guys are mostly in the multifamily space. In terms of, I guess, parameters, or maybe finding out, are there particular size? Is there a particular size of multifamily deals that you want to use infinite banking for, or how would that work?
Um, It doesn't matter. It doesn't matter what size. And this is what I started talking to a lot of my clients about, that I'm seeking in the real estate space, is you want to start from somewhere. You know what I mean? Like I've had cases where people have zero money saved, right, for their retirement. They're just starting. So it's good to start to have a habit of putting money aside, just in case, just when you have that muscle of saving money, then you can be able to leverage it in the future. So depending on the size of transaction that person does, and whatever they can comfortably set aside, we can design it based on that size. And as their investment grows, and as they grow in their investment, we can always encourage to put more money aside. Let's say they outgrow their plans, we can open new ones. You know what I mean? There's no limit to how many plans you can open, as long as it facilitates the size of business and growth that they're doing. And we encourage growth because, with the power of again, the compound interest, the funds get bigger, and then they have more access to more. And that could be a good vehicle for them for scaling. So maybe they bought 10 doors and then they want to scale up to like 20 doors or 30 doors. Now they'll have access to more funds to be able to put it as a down payment for, for scaling up their investments, their portfolios.
Yeah, and it's funny timing as well. I was just talking to a friend of mine last week, and a big thing he was talking about was kind of bridging that gap, right? Maybe he had a decent amount of cash, he had some cash, but just a little bit more would kind of really help him, get the deals done that he really wants. So it's neat to hear this explanation and see it kind of coming to life for maybe not yourself, or maybe it is yourself, or someone right?
Exactly.
Absolutely. Yep. Yep. And the more properties you add to your portfolio, obviously, the more your net worth goes up, the more your cash flow goes up, the more you can fund these types of these types of plans. And we haven't even talked about the estate that it creates for your family and the security that it provides there also. So if something, God forbid, happens to you, your beneficiaries get a tax-free benefit from that. That's reason for insurance, life insurance in the first place, and that is still there. So that's the other component that's like, I guess, as old as insurance, as life insurance is.
Mhm.
Okay, yeah, no, and you introduced, another interesting word too is insurance, right? So could you kind of explain it again, maybe how I guess insurance and infinite banking work together, or are they kind of part of the same thing?
Yeah, I can take this one, Terry.
Yes, please. Yeah,
So,
yeah.
so yes, so with insurance is basically the basic, insurance concept is to be able to have something set aside for the beneficiaries, for the family. Now, you can design a policy using this vehicle for infinite banking. I'll give you an example. In my career, when I started 10 years ago, I understood insurance. So when I got licensed and I was like, okay, I'm an insurance salesman, that's what I'm doing. I would open policies, $100 a month, someone would get a $250,000 in coverage. And so I explained to the client, hey, if something was to happen to you, this 250,000 would go to your beneficiaries, would go to your family. I didn't offer it as a tool for the investment because I was working with regular families that would work a 9 to 5 somewhere. Now, as I got older, I started learning about the laws behind these products. I started learning about how big corporations use it as a vehicle to like help themselves grow their money and as a tool, right? So now I started talking to investors and tell them, hey, because I mean this is the vehicle, right? This is the skeleton that we can design it for such and such and such. We can design it for tax-free cash accumulation. We can design it for deferred taxes plans. There's so many things you can do with the plan, and that's the beauty about being able to design plans like these is because it's the skeleton, it's a vehicle. And then now what features can we put into it? We can put an air intake or we can put a nice stereo system. We can make it go faster. You know what I mean? So the life insurance is a basis, it's a skeleton. So now how it's structured is it just depends on the design, and that's what makes it an infinite banking. Like I was going over a plan with Terry earlier, and we were looking at a client plan, and then we were like, okay, if you increase the insurance, the cash accumulation is not there because you need more cash to pay for the insurance. And if you reduce the insurance, oh, okay, now the cash accumulation is going up. So depending on how it's structured, and that's what it's gonna be called that. And there's some common, I guess these are marketing words, that people use to describe these plans. For example, like family banking or self-banking plans, infinite banking, um, executive bonus plans. So I've been here 10 years, so I've seen the transition of different names, but to me, since I've been selling these products the same, since from the time I started, I see how it's evolving and how the market is now taking it in the information and actually accepting it and using it for themselves, which is kind of cool to see.
Sure, absolutely. You know, and it is interesting to see that because personally, I don't know much about life insurance, nor infinite banking. So it was kind of neat to hear you guys kind of bridging that gap and how really they work together.
Yeah, and that's really the key is getting them built properly. If you put these together in a way that's not conducive to the concept, then it will not work the way it should. So the idea here is that we do want to build our cash value. That's the primary goal. The death benefit, even though it's great, it protects your family and it creates an immediate estate for your family. It's also secondary. We want to maximally fund these. We want to get as much into them as possible because of the way it protects and grows our income, and then also can transfer that and become a generational wealth vehicle as well. So that when you do have a potential, or your beneficiaries do claim on that benefit, it'll all be tax free, or at least federal income tax. And let me say this where it's properly stated: federally income tax advantaged.
Yeah, no, that's a great distinction to make as well, especially now with, so many changes and people being especially now in our economy more hyper vigilant and concerned about those sorts of things.
Yes, absolutely.
Yeah, definitely. Well, is there anything that y'all haven't said that you'd really just like to hit home for us?
I think that was a pretty good overview of the concept, and there's tons of material out there on it. It's not something. This is something that wealthy have done for a long time to protect and pass on their wealth, so
Mhm.
that it's not taken from them via taxation or other methods. So it's although it goes all the way back to the Rothschilds, if you wanted to. So it's not a new concept. It's just kind of newish to the masses, but it's something that we can employ too. So why don't we?
Yeah, absolutely. And I'm curious as well, are there any, do you find that there are other things that also kind of work hand in hand, within infinite banking? Is there maybe another product or something else that you kind of suggest to couple with that?
I think that when you're talking about doing business, especially if you're in real estate, you're going to be looking at entity formation and things of that nature and trusts. So yeah, there are definitely strategies that you can use and combine, really, supercharge your business, protect your assets, shield from Uncle Sam. So and we kind of deal with those. We like to build networks ourselves so that we have those knowledgeable people around us, so that we know where to go when we want to access that kind of information.
Mhm. Yeah, and then the structure of it will it could be 100%, a tax write-off vehicle for an investor. So if somebody's looking for something that they want to utilize, as a tax write-off vehicle, you can definitely use put money into a plan that's not going to disappear, right? Or have, like a lot of companies are looking for tax write-offs, and they would end up purchasing a vehicle, and then those vehicles, that it depreciates pretty quickly, right? Once you have put some funds into these plans, and it's growing for you, and you can be able to pull the tax tax advantaged. So I would think you can do.
Yeah, absolutely. And, could you also, I know you guys already touched on it before, but maybe explain a bit more about the tax benefits. I know that you talked, we spoke a bit about inflation and obviously Uncle Sam and different things like that. Could you maybe explain more of the tax benefits to using infinite banking in this capacity?
I can talk about that. So in terms of taxes, a lot of these vehicles that we use, when it comes to like, there's a tax rules behind them, right? Like for example, like 401k, 43B, 529s. These are tax codes. So if you go to the irs.org website, you can read on them, and it's gonna, like, specify to you exactly how these products are taxed. Same thing with these infinite banking plans that we design. They fall under the tax code 7702A, meaning you put after tax dollars in it and you can pull it out tax free as a loan, right? So that's one of the tax advantages of using these plans is it grows. You put after tax dollars in it, it grows tax free and you can pull it out tax free or tax advantage. Another tax advantage to having these plans is if you look at putting money in the market, you got to pay taxes on your dividends, right? Whether it's like more stock market, you got to pay taxes on your dividends. So these plans on your growth, on the rate of return, you don't pay taxes on that. So you don't have to worry about paying taxes just because, after tax dollars, you put it in, you can pull it out tax free. Same thing with using these vehicles when it comes to just having family legacy, right? Because you're purchasing life insurance. Life insurance is a non-taxable event. So when it comes to leaving family legacy, you don't have to worry about probate, right? Because you're gonna have these this assets, right? This insurance go to your beneficiaries, go to your family, because you're gonna state it in your insurance plan who your beneficiaries are. And so other individuals are worrying about probate. They're worrying about litigation and the government, the court cases eating up all our family assets that we've been working for so long, for a generation. And you've seen cases of where celebrities, never had these plans set aside without any trust or anything, and then all these assets, all this hard work has been eaten up with court cases. You don't have to worry about that stuff when we implement this plan. Another tax advantage, there's so many, but there's another tax advantage. I'd say that's the biggest one. There's another cool one. I mean, if the audience are in the real estate, capital gains taxes, and nobody wants to see almost half of our hard earned money go to Uncle Sam. So there's ways around it to defer out taxes for 30 years to forever. So we don't have to worry about those taxes. So there's some cool strategies, and every situation, every client is different. So I mean, that's what we do. We sit down with the client. We look at their short-term goals, long-term goals. What do they want to do with their money? How they earn their income? How we can prevent from paying crazy amounts of taxes? How we can unnecessary taxes? And by utilizing this good strategies that work for them and their pockets, and it also works for our pockets as well. So
Yeah.
yeah.
All right. Wonderful. Now that's a wonderful explanation there, because I know that's, on a lot of people's minds, kind of having more clarity about that sort of topic regarding taxes. Is there any final message you guys would really just like to leave our listeners here?
What do you think, Tony? I mean, I could give them kind of an example if that might be a little bit helpful.
Yeah, go ahead.
I recently had a policy designed for my wife. Okay, she's a little younger than me. She's 20. When she was 27, we set this up. So that was a year and a half ago. But we set up this type of plan for her so that basically the idea there is if we don't touch it, we don't take out a policy loan. I'm going to go ahead and just skip all that and just go straight for what's going to be possible with this in particular, the way it is. Where we came up with a premium, and again, we wanted to use this as our saving vehicle. We don't want our money going into a savings account because that doesn't earn us anything. So we set this up as a saving vehicle with a premium of $670 a month. Okay. 15 years from now, paying into it and don't take out any policy loans, don't invest in any real estate, don't increase our cash flow in any way, just that policy, we'll be able to draw almost $50,000 a year off of it, completely tax free, because it's going to be a policy loan drawn monthly. But she'll be able to start that at age 43. So now, just to put this in perspective, 50,000 is pretty darn close to the median household income for America. So at age 43, she'll be able to start pulling that until she turns or all the way through 104 years old. So 60 years worth of income at about 50K a year.
Wow.
And that's just one vehicle. So hopefully we're putting together more than that, obviously. Let's throw some real estate in there too and add to that and build it up. But I think that's just good food for thought. It kind of can show people how it can play into an overall plan. So I think it's a good way to leave people, and hopefully they have a better understanding of it. And if they need some information, of course, we can definitely hook them up with it.
Okay, sure thing. We'll have your contact info in the show notes, in the description of the video. Aside from that, where can we find you guys?
You know what? I mean, my phone number is, I give you my phone number. I don't mind. It's 830-455-0647. We're actually going to be starting a website here soon because we need to. It's just getting to that point where we've got to get some a way to answer questions quickly and have a place for FAQs and things of that nature. So we're going to be putting out, let's see, what was it? familybankdesign.com. And we also have infinitebankconcept.com we'll be building out. So look for those. They're not out there just yet, but we're going to try to make that a priority.
Okay, wonderful. No, Terry, Tony, I greatly appreciate y'all's time. This has been, a really interesting episode for me, especially because, like I mentioned, I didn't know much about infinite banking before this. So, it's been great to hear about, your background, a bit about more what you do, products you offer, and how this can benefit investors. So, thank you again for coming on the show.
It was a pleasure. Thanks for having us, Aaron.
Yeah, thank you for having us.
All right. Talk to y'all later.
All right.